Welcome back to the Deep Dive. Our mission, as always, is pretty straightforward. We take a huge pile of information on one topic, one entity, and, well, we boil it down for you.
We find the big breakthroughs, the key insights, so you don't have to sift through it all yourself.
Exactly. And today, we're looking at a project that, honestly, for years, its whole identity was simplicity. Crypto mining on your phone.
Pi Network.
Pi Network. But lately, they've made a series of moves, pretty strategic ones, that signal something bigger, a real push towards, institutional credibility.
Yeah, we're definitely diving deep into Pi today. If you've been around the Web3 space, you know Pi. Started by Stanford PhDs back in 2019.
Right.
The core idea was always making crypto easier to get into. Ecological mining, smartphone-based, aiming for, real global mass adoption.
And the sources we've looked at, they paint this picture of just incredible acceleration. We're really zeroing in on one specific month, August 2025. Our material call it a month of breakthroughs, a time that didn't just add features, but fundamentally shifted how people saw the project, pushed it into a new phase.
A more serious phase of Web3 development, yeah.
So our goal today, let's unpack the key events from that month chronologically and see how this mobile project started playing in the big leagues.
Sounds good. Let's start where they started, really. Strengthening the core. Beginning of August, they were focused on, user commitment and the tech foundation.
Okay, and they kicked that off with something that sounds intense. August 4th, this big update to the lockup feature. Users could lock up, 200% of their migrated Pi?
200%, yeah.
That sounds demanding, really demanding long-term loyalty.
It's definitely a strong signal, no doubt. Basically, it lets users lock up the Pi they've already earned, plus potentially more, and in return, they get a much higher mining rate going forward.
Wow. Yeah.
The purpose is kind of twofold. First, it encourages long-term thinking, stops people just, dumping tokens when things open up fully. And second, by taking a chunk of supply out of circulation, it helps stabilize the network, manages supply, which is, pretty crucial if you want to be a global currency.
Incentivizing the long game. Makes sense.
Exactly. Think long term.
So while they're locking in user loyalty, they're also boosting security. We saw that around August 23rd, right? This new feature, Passkey.
Yes, Passkey. And what's interesting here is how they blended, top-tier security with a better user experience.
How so?
Well, Passkey basically gets rid of traditional passwords, the things that are always getting phished or hacked, and replaces them with secure sign-in using your phone's face or fingerprint scanner. Super easy, much safer.
Okay, yeah, that's a big deal for usability.
Absolutely fundamental. Especially with millions of users worldwide, you have to protect their assets if you want to be taken seriously, particularly by, mainstream finance. It's table stakes.
And it wasn't just the user-facing stuff. A few days later, August 28th, the tech base itself got stronger. They released the Linux node.
Right. That makes it easier for people running full nodes, especially in server or cloud environments. More robust infrastructure.
Got it.
And then, right after that, they announced they were getting ready for a big network upgrade. Protocol version 23, or V23.
Okay, V23. Sounds technical. What does it mean for the average user or the network?
Well, the name isn't the point, it's the outcome. This upgrade is specifically about making transactions faster, much faster, and making smart contracts run more efficiently. Think of it like upgrading the network's pipes, going from, say, an old dial-up speed to fiber optic for decentralized apps. Better performance across the board.
That's a good analogy. So, okay, summing up that first part, lock in the users, secure their stuff with Passkey, boost the blockchain's engine.
Much, yeah. Laying the groundwork.
Now let's shift gears. Segment 2 is where things move outwards. Strategic growth, market liquidity. And the first item here, honestly, was unexpected.
The robotics investment, yeah, that definitely turned some heads.
Right. August 6th, Pi Network Ventures, their investment arm, jumps into a $20 million funding round for a robotics company, OpenMind. And they're investing alongside huge names like Pantera Capital, Coinbase Ventures. A crypto project known for phones. Suddenly investing in humanoid robots. This is kind of flashy, maybe.
It does seem like a leap, and that's a fair reaction, but the sources we looked at really frame this as strategic.
Strategic how?
The thinking, apparently, is about integrating PiCoin into this future idea of a Web3 autonomous economy.
Autonomous economy.
Yeah. The long view is a world where robots handle services deliveries, maybe specialized tasks autonomously, and they need a way to get paid, right?
Ah, I see.
The vision is for PiCoin to be that payment rail. It tries to elevate Pi from just, a token you trade to potentially a real currency for this next wave of automated services.
Okay, that provides some context. Positioning Pi for robot payments. Interesting. Let's talk market access then. Mid-August, we saw moves to make it easier to get Pi with regular money, right?
Yes, absolutely key. They added more fiat on-ramp partners. TransFi and Banksa came on board.
And why is that important? Just more options.
It's infrastructure. It means more ways for people globally using familiar methods like credit cards or local bank transfers to actually get Pi easily.
Right.
Reducing that friction, the whole complex process of buying crypto, is still maybe the biggest hurdle for mass adoption. Adding multiple partners shows they're serious about tackling it.
And alongside that, a major exchange listing update. OKX added a Pi USDC trading pair. They already had Pi USDT. Why does adding USDC matter so much?
Okay, so this ties right back into that theme of institutional credibility we're tracking. USDT is the biggest stablecoin, sure, but USDC, it's generally seen as having better regulatory compliance, more transparency, fully audited reserves backing the dollar peg.
So safer, more regulated.
In the eyes of many institutions, yes. Adding a USDC pair kind of signals that Pi wants to play in more regulated, compliant sandboxes. It makes it easier for certain types of investors, maybe more cautious ones or those with stricter mandates, to get involved, people who might avoid USDT.
Boosts credibility and liquidity from a different pool of capital.
Exactly. It's another brick in that credibility wall.
Okay. And building on that ecosystem theme, they also turned to their community. August 18th, the Pi Hackathon 2025 was announced.
Yep, their first big community developer event in this new open network era, with a pretty decent prize pool too, $160,000 worth of Pi.
So the goal here is just get people building stuff.
Pretty much. Generate real utility, encourage developers to create practical applications, dApps that actually use Pi for something tangible in daily life, less speculation, more real-world use.
Makes sense. A network needs apps.
A network is its use cases, ultimately. The hackathon aims to kickstart that.
Then right after that announcement, we had that really weird, huge token movement. August 22nd, 23rd. Over 550 million Pi tokens moved from the Pi Foundation's main wallet.
Yeah, that got a lot of attention in the community fast.
Understandably. That's a massive amount. Led to tons of speculation, right?
It really did. And this is where, communication becomes important. The general guess, the speculation, was that it was strategic. Maybe funding for the hackathon prizes or for Pi Network Ventures and their investments like Open Mind.
Seems plausible.
Plausible, sure. But the lack of an immediate official statement explaining the move, it caused a bit of unease. It showed the community is watching very closely. But also, if you're aiming for institutional maturity, maybe don't leave room for wild speculation.
That's a fair point.
Yeah.
Transparency matters if you want that level of trust. Okay, let's move to our final segment. This is where that perception shift really crystallizes. The links to traditional finance, that external validation.
Right. And this next piece was probably the biggest headline grabber of the month.
I think so too. August 26th. Ulu Ventures, a well-known, respected Silicon Valley VC firm, officially puts Pi Network in its investment portfolio. You really can't overstate this. For years, people dismissed Pi. It's too slow, it's just hype. Having Ulu Ventures, a firm that backed huge successes early on, actually invest, that feels like a genuine seal of approval.
It's a massive signal, and we should probably unpack why a traditional VC like Ulu is different from, say, a crypto-focused fund.
Yeah, good point.
Traditional VCs, they're looking at business models, revenue potential, scalable tech, not just Web3 narratives. Ulu putting their name and money behind Pi tells the whole professional investment world, okay, we've looked under the hood, the tech, the user base, the vision. It's solid. There's real potential here.
So it cuts through the crypto skepticism from the traditional finance side.
Instantly legitimizes it in a way internal progress reports just can't. It signals serious commercial viability.
And that kind of validation, that's what opens doors for maybe bigger exchange listings down the road.
Yeah.
High-profile partnerships.
Absolutely. It says due diligence done. This isn't just some hobby project anymore. It's probably the strongest external validation they could get, short of, major regulatory green lights.
Okay. And if that wasn't enough to cement their move towards the traditional world, they finished the month with another landmark. August 30th, the Valor Pi ETP gets listed.
An exchange-traded product listed on a Swedish exchange by Valor Inc.
Explain what an ETP is and why listing on a traditional exchange like that matters so much.
Right. So an ETP, an exchange-traded product, is basically a type of security. It trades on a stock exchange, just like a share of Apple or something. And its price tracks an underlying asset, in this case, Pi.
Okay.
The crucial part is you can buy it through a normal brokerage account. You don't need a crypto exchange or special wallet.
Ah, so it opens the door for traditional investors who maybe can't or won't touch crypto directly.
Precisely. Think pension funds, wealth managers, even conservative individual investors who stick to traditional stock markets. They can now get indirect exposure to Pi's value, but within a regulated, familiar, secure environment.
Wow.
Listing on a regulated European exchange, that's a huge legitimacy boost globally. It brings Pi into contact with pools of capital that were completely inaccessible before. It's proof this isn't just an app anymore. It's now a financial instrument recognized in regulated markets.
So let's bring it all together. We've gone from internal upgrades, security fixes, this surprising robotics investment, all the way to, well, Silicon Valley VC backing and a European ETP listing. What's the big picture takeaway from August 2025 for Pi?
I think August 2025 is clearly the turning point. It's when Pi Network really transitioned from being primarily a user acquisition project into a developing financial ecosystem with serious aspirations.
Right.
They succeeded on two fronts at once. Externally, they built that crucial credibility. The VC investment, the ETP listing, those are huge signals to traditional finance. And internally, they were laying the groundwork for a real ecosystem, fueling the hackathon for apps, making strategic investments, shoring up the core technology. It showed steady, accelerating progress towards that big global vision.
It really is quite a journey, especially when you think back to the very beginning. Just those Stanford PhDs, the idea of simple green mining on a phone, tap a button once a day, aimed at, everyone.
Yeah, the contrast is stark, isn't it? Between that initial vision of easy access for the masses and now having a regulated financial product on a European stock exchange.
Which leads perfectly into our final thought for you, the listener, to maybe chew on.
Yeah, something to mull over.
If Pi Network really started with that goal, easy, ecological mining for the masses, total democratization via mobile phone, what does its arrival in the world of highly regulated traditional finance products like that Swedish ETP, what does that actually mean for the original vision?
Is it the ultimate fulfillment of mass adoption, bringing crypto to traditional systems? Or does it change the nature of the project? Think about that convergence. Wall Street meets decentralized accessibility. What are the implications?
Something to consider. We'll see you next time for another deep dive.